Hello everyone, welcome to Business Learnings. In this video, we will talk about Interglobe Aviation, which is Indigo, the leading low-cost carrier, aircraft carrier in India. So we'll divide this video into four parts. First, we'll talk about the airline industry. Second, we will talk about the firm Indigo and what is its history, and I'll also talk about my personal experience with it. Next, we will talk about what are the risks involved in this stock. And at the later part, we will talk about the valuations, if it is justified or if it is an attractive value at this point in time. So let's start with the industry. So while talking about the industry, I'll just tell you one thing. In India, in the year 2019, um, about zero point 0.2 seats were sold per capita in the entire year. In China, this number was zero point 0.4, and in US, this number was 2.8. What does this number mean? This number means that uh, on an average, one person booked zero point 0.2 seats throughout the entire year. It doesn't make sense because not all of the citizens book flights. But the key thing that you should look for at this point in time is uh, China is selling twice as much tickets as India sells, and US sells about 15 times more tickets than India sells. Even if we expect that we will reach at the levels of China in the next 10 years, we can safely assume that the value is going to be double. There is a double, the market is going to be doubled in the next 10 years, which means clearly, if you add the inflation as well, if you add the generic economic prosperity, if you add the international flights as well, this clearly comes out to be more than 15% of industry growth. So the airline industry is going to grow with about 15% CAGR for the next 10 years based on general calculations. So this is quite an interesting industry to be in. Uh, Warren Buffett once said that if you want to be a millionaire and if you want to stay in the airlines industry, you start with $1 billion, invest in the airlines, and you'll be a millionaire. He wants to say that you are only going to lose a lot of money in the airline industry, and there has been a lot of incidents. Kingfisher got gone bankrupt. Uh, Jet Airways gone bankrupt. A lot of airlines in the United States, across the world, a lot of them gone bankrupt. So why is Indigo succeeding? Indigo succeeding because it, for the first time in India, it started the low-cost carrier model. Back in the time when it was launched, about in 2006, uh, the other competitors, Kingfisher, Air India, Indian Airlines, those were its key competitors back then, and those all of them were premium priced. Jet Airways, these were all of these airlines, they were premium models. They were charging premium prices for carrying passengers. And Indigo, it was a cheap, it was a value for money model, and that's why it succeeded. It kept on gaining market share, and at this point in time, it has about 50% of the market share, the entire India. So you can understand the kind of command it has over Indian markets. Uh, Talking more about the firm, last year there were some corporate governance issues. Both the founders of the firm were fighting upon things. But I'll just talk about my personal experience with Indigo. Uh, so last year it has again been awarded as the most on-time performing airline in India. And you know, I have flown with Go Air, I have flown with Vistara, I have flown with Air India, I've flown with Jet Airways. I had almost all the airlines I've used, and I've found that Indigo usually has the most on-time performance. I'll talk about one experience. I had a connecting flight from Lucknow to Pune, and in Delhi, I had to exchange the flights. My onward journey was through Go Air, and my return journey was through Indigo. For Go Air, I had to go to the you know uh, domestic transfer terminal. I had to get my security check all done, even though the time gap between these two flights was just 45 minutes. The wait time was just 45 minutes. I still had to go through the security in case of Go Air. While I was returning from Pune to Lucknow, uh, all the transfers were done outside the terminal. I didn't have to go to the security check-in. The personnel from Indigo did all the check-ins, and they made sure that no one is going to wait, and their airline is not sitting there idle waiting for passengers to get on board, so that they do not miss on any other passengers, so that they do not get delayed. And this is the kind of difference. These are small things which if a company does, it makes a difference in their earnings, how they earn the trust of the customer, and how they serve customer. And this is what takes them projects them to the long term. So this was quite a good experience, and that's why I think Indigo does a lot of similar things. It has focused a lot on the customer satisfaction recently, and it has been doing phenomenally well in that department. So yes, this company is going to be there. Warren Buffett talks about four parameters: the history of the company. We'll talk about all of the four, and we'll try to fit if Indigo fits in all of those four. The history of the company: it has had a phenomenal history. The profits, the revenue, operating margin, everything has been operating profit, everything has been growing by more than 20% compounded annual growth rate (CAGR). At least the rates have been 20%. Uh, and yes, next is the earning visibility. I already talked about the customer satisfaction and everything that it is doing. So we can safely assume that we have some earning visibility. And also, given that the industry size, the airline industry size is growing at such a rapid pace, we have a positive outlook about the future of the company. Now, if it is trading at a discount or not, that is a difficult question, because it purely depends upon your perspective. How much do you want to risk? Personally, from my perspective, about 1300 rupees for the share is a fair value for it. Today its results were declared, and the shares are going to jump tomorrow for sure in the next trading sessions. But let's see. For the corporate governance, there were some issues, and those issues pushed the prices. The share price of Indigo actually went up to about 1900, and because of those corporate governance issues, and combined with several other earning reports, the shares went down as low as about 1400 rupees, and that was probably the buying opportunity if you believed in the company. So yes, this was the four parameter analysis: the history, the earning visibility, if it is trading at a discount, and corporate governance, the four factor Warren Buffett model. And it fits in approximately all of them. So a thumbs up from my side. Talking about the risks of the company, it has two kinds of, based on my understanding, mainly two kinds of risks. The major ones: first is the oil prices. So internationally, the oil prices fluctuate a lot. If you just look at the chart of WTI crude oil prices, they have been varying a lot recently. Not just recently, they have been varying. So Iran, US, Iraq, Venezuela, everything. So oil depends upon a lot of things: USD versus INR, forex exchange rates. So that is a significant part of risk. And because oil cost is a major cost in any airline's P&L statement, so this is what uh, drives their profits and revenues. So yes, oil price first. And second is the high price to earnings ratio. Indigo has about 63 of PE, which is a big number. Anything above 50 is paying 63 rupees to earn 1 rupee of profit is not a very efficient model. But any company which has a very good growth potential in the future, it tends to trade at premium valuations, and that's why these valuations could be justified. These were the two risks. Now coming to the recommendation, if based on my understanding, I first, a disclaimer: I already own the stock. I purchased the stock when it was trading at about 1400 rupees, uh, and I will continue to hold it, because I hold on to stocks. I buy the stocks with the intention of holding it for the next 5 to 10 years, for a very long time, and that's why I'll continue to hold the stock. For people uh, who want to buy it right now, I'll again say that the if you want to hold on to the stock for the next 10, 20 years, for a very long time, then it is a good stock. And you can also decide to wait for oil prices to go up, and subsequently the share price of Indigo will go down, and you can make your purchase. uh, but It is a good stock for a long term. Just wait for the right moment. Just wait for the share prices to dip, and that will be a right moment to accumulate more of it. Thanks for watching. If you have been watching this far, please post any questions in the comment box below. Please subscribe to not miss such news from financial markets, shares, stock markets in general. Thanks for watching. See you in the next video.